What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we started to bounce off strong support. So the question from here is, are we going right back into a bull market or are we going to see support break down and enter a bear market? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So first up, we'll start out with what I expect to see happening in the market and then we'll break down the price action. So first, the expectation is that we're pulling back before we go into another bull market that should take us back up to retest the previous all-time highs. And in order for this to happen, we will need to hold up above this critical support level. So we don't have any price action confirmation that we're breaking down and going through a bear market. And we don't yet have the price action that we're breaking out and going into a bull market. So we are in that transition zone where we're going to know very soon whether or not we're going into a bull market or we're going to break down and enter a bear market. And a lot of that is going to depend on earnings season, which is currently here. And we're starting to see the bank earnings and eventually we'll get into the big tech earnings. And then the market should decide which direction it wants to go. So right now, based on what I see in the price action, I do favor the upside scenario, but we don't have any price action confirmation that we're in that scenario just yet. So hopefully that makes sense. And now I want to give you those critical levels to pay attention to. So by far the most critical support levels in SPY, if we are entering a bull market, we'll be holding up above 438. If we break 438, the last line of defense is going to be right around 433.5. And below that, we do have a very strong support level at 428. But if we start testing 428 and we start breaking down to that level, the market will be looking incredibly bearish, and confirmation we're entering the bear market will likely be the breakdown below SPY 428. So those are the three critical support levels I want you to pay attention to. And to the upside, we need to see SPY breaking back above 445. And we should be back into a bull trend and we should be back into a bull market when we start to see SPY getting back into the 450s. So above 450, we will have strong resistance at 457. And by the time SPY breaks out above 462, we should be in a full bull market that could go to brand new all-time highs. So those are the extremely critical levels to pay attention to and watch the price action. And like I said in the introduction, we don't have any confirmation in either direction. So you will need to watch the price action very closely at these levels. Don't forget, we do have a gap at 446. So if the bulls do gap above that gap, we will have a scenario of an island reversal. And basically an island reversal means that we'll be entering an uptrend from the existing downtrend, which will be very bullish price action. So if you see SPY gapping up above 446 and not closing that gap and you're still bearish on this market, you are going to have a bad time. So try not to be bearish if SPY gaps up above 446 and then runs up and closes near the high of the day near 450. By seasonality, tomorrow is going to be a very bullish day, but that doesn't guarantee anything, so you still need to watch the price action very closely. Remember, we were going down on low volume selling, which is expected during a pullback. And remember, I did tell you these pullbacks are typically a bear trap. So it doesn't surprise me to see all of the bearish sentiment and everybody losing their mind, screaming that we're in a bear market and screaming that SPY is going to $0. So block out the noise and follow the price action at these critical levels, and you will be in a much better position than all of the people panicking and thinking it's time to short this market just because the noise is getting louder. Jumping over to the NASDAQ 100 triple Qs, we were up 2.03% today, so we did have a bullish day, but just like on SPY, we have no confirmation of either direction in a breakout. To the downside, in order to get bearish, you need to see the triple Qs closing below 340, and we should be in a bear market the next time the triple Qs close below about 335. However, to the bullish direction, we're getting a lot more bullish above 353, and the bullish breakout should be confirmation of a close back above 365. By the time the triple Qs are above 371, we should be back in that full bull market, which means we could test new all-time highs. And the triple Qs do have two gaps to fill at 348.5 and right around 360. And just like on SPY, there is the possibility the bulls gap over this gap at 348.5 and turn these three candles into an island reversal, which will be a bullish development. So if the triple Qs start gapping above 348.5 and running to close the gap at 360, you should not still be bearish on this market because that will be incredibly bullish price action. So wait for the breakdown below 335 to get bearish. And if you're waiting for bullish price action confirmation, wait until we at least break back above 353 because everything between that range will be choppy and there will be indecision in both directions. If we start to see very impulsive price action breaking out to the upside, that will mean this is more than likely just a low volume sell-off, which is a pullback, and then that means we could go right back into a bull market and go back up and break out and possibly test brand new all-time highs. So try not to get overly bearish while the triple Qs are above 335, and watch that volume closely, because if you see high volume selling and if we slice through support, that will be confirmation we're entering the bear market. On the Dow Jones, we are up 1.03% today, and the Dow Jones looks like it is successfully bouncing off of that support zone right around 340, and we did get a close back above the 50 EMA. So from here, the next bullish breakthrough for the Dow Jones will be a close above 347 and a breakout above 350. And above 350, you're looking for resistance at 353, 356, and 360. So remember, the triple Qs and the Dow Jones both have gaps to fill at 360, and we are looking very bullish if we do start to break out from these levels. So watch those gap fills as potential price targets in the short term if we start to see the bullish breakouts. The Dow Jones is getting a lot weaker if it closes below 340, with price targets to the downside right around 333 and 330. On the Russell 2000 small caps IWM ETF, we were up 1.9% today, and we did get a bullish bounce off that support right around 197, and we still haven't filled the gap at 195.7. So there's a gap at 195.7 and a gap at 202.5. So it's anybody's guess which gap is going to fill first, but right now it looks like the bulls are closing near the high of the day, and it looks like they're starting to gain most of the momentum. We're still below the 50 EMA, but that can change at the drop of a hat, so look for a breakout above 204 to get a lot more bullish. But we really aren't getting bullish confirmation in the small caps until we close above 208, and we should have confirmation we're in the bull market when we close above 212. If we break down below the gap support at 195.7, look for a retest of the lows at 193 and 191. On the Arkk ETF, we were up 3.16% today, and the Arkk ETF is bouncing off of this low right around 59, and we have a gap to fill to the upside at 66 and a gap to fill to the downside at 54.7. We still have the bear market and the bear trend, so it's more than likely we will fill that gap to the downside. So watch that gap fill at 54.7, and you're getting a lot more bullish if we start closing above 71, even though we will have resistance at 65 and 67 on the way to get that bullish breakout. Try not to get bullish on Arkk while it's in a bear trend until it at least starts getting the bullish price action above 71. On the VIX, we were down over 10% today, and the VIX is starting to get crushed back down below those levels at 24, so this is going to be a bullish development. We started to gain bullish momentum as the VIX was breaking above 24 for 2 days in a row, but the VIX is quickly giving a lot of it back with a close right below 22. So the next time the VIX closes below 20, we will more than likely see those bullish breakouts, and we should be entering a confirmation of a bull market. So you're getting a lot more bullish when the VIX gets below 20 and a lot more cautious if the VIX gets above 24. So watch the VIX at those critical levels very closely. On Bitcoin, we're currently up 3%. Bitcoin is starting to bounce off of the low right around 39,000, but we are still below resistance at 42,000. So try not to get overly bullish below 42,000 because there is going to be the probability we get rejected at resistance and come down to retest support at 37,000. You're getting a lot more bullish above 43,000, so you can buy the breakout if we do start closing above 43,000, and the next bullish breakout above that will be the breakout and close above 45,000. So watch those two critical resistance levels, otherwise look for the retest of 37,000 if we can't get a bullish breakout. On NVDA stock, we were up 3.25% today, and NVIDIA is bouncing off of the retest of the resistance trendline breakout, so that is a bullish development, even though it did take a lot of give back to get down to that retest. So far we are bouncing, but we did get rejected at resistance at 223. So your bullish breakouts from here will be above 223 to close the gap at 230. And if we can continue to run from there, you're looking for strong resistance at 244 and 250. And above 250, you're looking for the gap close at 258. We're developing a bear trend, so try not to get overly bullish, even though it does look like we're due for a bounce in the short term. That could take us up to at least fill the gap at 230 and possibly retest resistance at 244. Watch that very strong support right around 210 to 209, because if we do retest that level, we could get a very impulsive bounce that could take us all the way back up to close the gap at 258. And if we break below 209, you're looking for a retest of support at 197. On Tesla stock, we were up 3.59% today, and Tesla did close that gap at 1021 and did test resistance right at the 20 simple moving average right around 1026. So the next bullish breakout for Tesla will be back above 1026 with resistance at 1065 and the gap close at 1087. Above the gap close, we have resistance at 1108, and we get the bullish breakout above 1150. So you're a lot more bullish on Tesla above 965, and we are starting to bounce from that level, and you're getting a lot more cautious below 965 for a retest of support right around 937. On Apple stock, we had a strong bounce today, going up 1.63%, and so far it looks like Apple is bouncing off the support and closing back over the 50 EMA. From here, the next bullish breakout will be a close above 171, and then we should have a very quick trip to fill the gap at 174. Above 174, it'll be looking like we're regaining the bull trend, so it does look like we could go up there and fill that price target up there at brand new all-time highs at 188. So above 174, which is the gap fill, look for resistance at 176, 179, and 182. You're getting a lot more bearish if we break below 167, with strong support around 165 and 162. On the financial sector, we went absolutely nowhere today, and we did bounce off the support trend line, so we're continuing to consolidate in this wedge. So look for the bearish breakout to the downside or the bullish breakout of this wedge to the upside, or you're getting a lot more bullish on a close back above the 50 EMA. On the industrials, we were up 0.94% today, and we did close back above the 5 EMA, but we can't get bullish until we get back above the 50 EMA, and above the 50, we'll be looking for the gap close at 106. On the healthcare sector, we were up 0.5% today, and we did bounce off of the support trend line and the 20 sample moving average, so we held on to the bull trend and we still have bullish price action. On the energy sector, we were up 1.5% today, and we still have bullish price action and a bull trend, but we're starting to print some indecision candles as we retest the previous highs, so look for a breakdown below support to see the correction in the energy sector. Otherwise, we should break out and start seeing new highs above this level right around 79.6. So jumping back over to the S&P 500, this is going to be a very critical test for either a breakdown through support to enter a bear market or a breakout above resistance to continue into a bull market. Either way, we're going to know very soon which direction this market wants to go. And remember that I do favor the upside off of this strong support. Even though it seems like all odds are against the bull market, there's just way too many retail bearish sentiment out there, and that is going to get punished with a very impulsive bull rally in my opinion. So we're getting a lot more bullish above SPY 450 and a lot more bearish below 433.5. So let the price action do all the talking. And remember, the market doesn't care what I think and the market doesn't care what you think. So follow the price action because the price action is king. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility, I think now is the best time to be a bank member. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.